Welcome back. I'm Pratap here. Today is 24th January 2025. In this video, I'm going to evaluate the performance of high liquidity zones generated in the previous report. This is going to be a very interesting video. A lot of learning is there. And even before that, all of you please understand we are providing complete free training on supply demand zone price action. You might be knowing the cost of the training is over 8,000 US dollars, but we are providing complete free training as part of promoting our NeoStock software. You can access all the training lessons at our NeoStock YouTube channel homepage. At our homepage, click on the tab, the last tab, posts. Some of you might be seeing the last tab as community. So click on the tab. You get access to our free training course. And this post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course YouTube playlist. Here I kept all the training lessons. You just need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So please join at our Telegram channel. It will be helpful to you. Each time we release a new YouTube video or any other important updates, we will be providing at our Telegram channel. Now let's get into the analysis of the high liquidity zones identified in our yesterday's end of the day report. So we identified 1, 2, 3, 4, 5, 6 high liquidity zones from daily and 75 minutes time frame. Okay, the first one is Tata Steel. This is a daily high liquidity supply zone. Our software identified this as a high liquidity zone as a drop, base, drop and follow through candles. Okay, this 75 minute, this daily zone already we fine tuned. Previously we have discussed this stock. Probably 17th Friday, January report might have been listed. We might have discussed it on Monday 20th January video. Please refer the old videos. We have discussed this video earlier. I have fine-tuned this zone. Whatever we fine-tuned earlier, exactly from there only we got the trade. Okay, quickly let me explain. Even though we discussed earlier, we have a 75-minute zone. We have drawn a 75-minute zone, drop, 4 base candles and a drop candle. Within this we have drawn the 15-minute zone. So we have this, consider this as a drop, 1, 2, 3, 4 base candles and a drop candle. See, all these are all failed ERC candles. One we are using as a leg in and another one we are using a leg out, but this is a hidden body. If you add, it is a drop candle. Okay. Next, this 15-minute zone we fine-tuned with 5 minutes time frame. So here we have a rally candle, 1, 2, 3, 4, a medium-sized candle, also a little bigger, is also part of the base, and then a drop candle. What is this extra I have drawn? First, let me delete this, then I will explain. Something, you are seeing one more zone at the wick of this candle. See, at this wick of this candle you are seeing one more zone. Why I have drawn? Let me explain. First, let us focus on this zone. If you draw wick to wick, the zone will be like this. Okay, so what I did, I have type 2 proximal level, I have drawn this zone. So this is the area you should plan your trade. But the problem is, this risk means this is our entry, this is our distal line, a little above stop buffer also you will add. The moment you calculate the risk, maybe some entry buffer also you may add. If you calculate the overall risk, the risk is much higher. It is beyond 2%. What is our maximum accepted risk? 2%. So this is beyond your 2%. Beyond 2%, how do you plan your trade? You cannot, right? But you have an option. Position sizing. By doing position sizing, you can minimize the risk. You can reduce the risk below 2% level by doing position sizing. You already learned these concepts, position sizing, in phase 2 training program. Probably in lesson 18 or 19 I explained position sizing. But what about F&O traders? They can't position size, right? Unless they are very high value traders. If you are a very high value trader, maybe you may buy some 10 or 15 futures or options. Probably you position size and reduce. Instead of buying 10, you buy only maybe 4 or 5. That way you manage. But what about the small investors? Maybe you buy only 1 future or 2 futures or maximum 3 futures, not beyond that. So they can't take the trade. If they go to cash segment, they can go for intraday trade. But the problem in the cash segment is you can't invest a huge amount. You get a very small. Why we are going for F&O? You want to grab more profits. Your profit will be limited to very small. So that is we have these issues with this stock. And previously also, have you noticed the prices came near to the zone? Immediately it alerted me. Some price action is taking place here. That's why what I did, I went to the 1 minute zone, because here I want to manage the risk as a futures trader. As a futures trader, I can't take this much beyond 2% risk. So that's why what I did, I went to 1 minute time frame. And 1 minute time frame, very interesting points you observe. See, I am not suggesting you to go for 1 minute and fine tune every time. No, rare situations. Because 1 minute, the danger is you might be having multiple order flows. When you have multiple order flows at 1 minute level, if first order flow is violated, second order flow will execute and it will save your trade. That's why always we are taking our trades at the 5 minutes level. But today, what made me to get into the 1 minute level? Because of the risk, heavy risk. I want to see any 1 minute level, at least I get some order flows are available. That way I can minimize the risk and I can plan my trade. Then interesting thing I observed, here you see, you have a drop, 2 base candles and a drop candle at the hidden body. It is in the dynamic view, it is a drop, big drop till close of this candle. This green color body, you can assume it is like a wick for you. When you consider from the close of this candle, you will get that kind of dynamic view picture in your mind. Anyway, we don't care about this wick. We got sufficient body from close of this candle, and the close of this candle, we have a big drop is there. That itself good enough to consider a drop candle. So we got this drop-based drop. What about earlier? See, earlier price action, lot of consolidation is taking place. There is no institutional order flows here. That means this entire area will easily be violated once this zone is violated. This drop is violated. Mostly this entire area order flow will be consumed easily. In just a second or maybe a minute period, easily it will pass through. That means this is the area we have to focus. That's why I have drawn this zone. This is a 1 minute zone. Okay, not only that, another interesting thing I observed, this 1 minute zone is acting as a high liquidity zone. Why? After the zone creation, you see, it just at the type 1 proximal, it picked up the orders and sharply it came down. See the rejection after that? The next 1 minute, slowly prices were moving down. See how it went. That means this is the area pushed this entire prices. Because this is the high liquidity area. This is the origin for this entire movement. This drop-based drop is the origin for this entire movement. And that origin is having a strong institutional order flow. And again prices reached that level after some time, after few days. See, once again you see here what happened. Multiple times prices were entering and came down, again went, came down. So this zone is testing multi times, and each time it is not letting the prices go inside. That means a strong institutional order flow is here. So definitely we can plan as a high liquidity zone, 1 minute high liquidity zone. You may ask a question, is it an aggressive trade setup? No. This is a fine-tuned zone at 5 minutes level. See, this is a 5 minute zone. At 5 minute zone, at the proximal line, this is a overlapped area. You may ask a question, why I have drawn wick to wick? Because 1 minute zones are very small. If you look into the time 5 minutes, this 1 minute zone from 5 minutes, they look very, very small. Further reducing means it's not easy to, sometimes you may miss the entries also. That's why always 1 minute zones, we have to draw wick to wick. 5 minute zones, you have to draw type 2 proximal to manage the risk. If the risk is very small in the 5 minute zone, then we will draw wick to wick. Because we don't want to miss the trade. See, here we have two goals. One goal is to reduce the risk. Second goal is you should not miss the trade. That's why balancing you have to take care properly. That is a real challenge for all the traders. If you do too much fine tuning, you know what happens? You miss the trades. Once you miss the opportunity, there is no use, right? So you have to manage in such a way the trade should not be missed. At the same time, risk management should be accurate. See how accurately we are doing analysis. Generally, we limit at 5 minutes level. 1 minute we don't go, because if you are planning at 1 minute level fine tuning, many times you miss the trades. This is the problem will be there. So, but today why we are analyzing at 1 minute? Because the risk is beyond 5% level. Sorry, 2% level. The risk is beyond 2% level. Beyond 2% you can't handle the trade. Position sizing, by doing position sizing, cash trades only you can take trade. F&O trades you can't take a trade unless we are a high value investors. So because of these reasons, we are using this approach. The last option that is left for us is this is the one. Same concept you will be learning in another stock later. So today both trades, whatever the trades we got, 3 trades we got today, all trades based on this concept only. All the 3 trades you can't take at 5 minutes level, risk is beyond the 2%. But today whatever the trades we got today. Okay. So drop base drop. This is the 1 minute high liquidity zone. And moreover this 1 minute zone is a fine tuned zone inside the 5 minute zone. That means it is a 5 minutes, 1 minute zone is overlapped with the 5 minute zone. You may say it is part is outside. Actually part is not outside. 5 minute zone we have drawn up to type 2 proximal. Let me change that, then you will understand. Type 2 proximal. Now let me draw type 1. See, now exactly our 1 minute zone is inside. Let me increase the thickness of this 1 minute zone color. So this is the 1 minute zone. See today what happened? Prices entered into this 1 minute zone. When? At 9 o'clock 20 minutes. See here, because at the proximal only it is just entering. In all the instances earlier also it is happening here. Just touch the proximal and coming down. Today also same thing. A little inside the proximal it went today. A little bit above and then sharply it came down. And this is the way this Tata Steel has given 1:6.7 RR until this 15 minutes target. We have a 15 minutes target. Let me show you. This is the one. We have a drop base rally. After that, price just came. Sorry, this is 25 minutes. Let me go to 15 minutes. Yeah. We have a drop base rally. See, price just went and touched, and again same candle it came down. Sorry, next candles it came down. This is open and sharply came down, and the following candles, and here it reached the target. If you go to the 5 minutes, we know morning 9:25 minutes candle we got the trade, and 10 o'clock 20 minutes candle it reached the target. That is the way Tata Steel has given, achieved 1:6.7 RR. And what is the profit? Let me open the Excel sheet. Tata Steel has given 10,725 rupees profit, which is 7.9% ROI as per one futures margin cost. Because we are calculating ROIs based on one futures margin cost. So excellent trade. And after that, again prices reached this, because it is a high liquidity zone. You might have taken another trade. This time the zone is violated and your trade would have been stopped out. But whatever is stopped out is just negligible, because already you got a good profit. From the profit, even if you deduct, still it will be a big profit. A small amount only you will be losing here for the second trade point of view. But anyway, we are not discussing about the second trade, because we will check. Because any zone, one time it is performed, that is a successful for high liquidity zones point of view. This one already given 3 times this 1 minute zone. This is the third attempt. We took fourth attempt, it is violated, because we never know when a high liquidity zone will be violated. The rule for high liquidity zone is keep on you have to take trades until it is violated. One day it will be violated. It may violate in the first attempt itself. That day your trade will be stopped out. Sometimes it may go up to 7 times, 8 times, even 9 times also you get profits continuously. Anything will happen with high liquidity zones. So that's why the ground rule I set for high liquidity zones, you keep on taking the trades until the day it is violated. Until that day you will enjoy the profits. The day when it is stopped out, you not even bother about the stop loss value, because previously we enjoyed all the profits given by that zone. Same thing happened today. We got a trade, gave a very good profit, and it gave just 7.9%, close to 8% ROI it has given. When it is stopped out, hardly it is, because 1 minute zone, hardly it might have given, your loss could have been maybe a negative ROI, maybe some 0.4% or 0.5%, not more than that. Because it is a 1 minute zone. The risk is very, very small. Okay, this is about Tata Steel. But another interesting thing is, Tata Steel again created a new 15 minute zone. Rally base drop. That means still this zone is active. Because we are in the 75 minute zone. See, within the 75 minute zone, new 15 minute zone is created. Old 15 minute zone is gone. New 15 minute zone is created. Within the new 15 minute zone, fine-tuned 5 minute zone is there. We have a drop base, drop is there. But one interesting thing is, lesson 28, which concept did you learn? pierced zones, right? Do you remember lesson 28 concept? Those concepts, pierced zones, one interesting thing is, some special pierced zones, the same area, the zone will be violated. Next time again, same area, new order flows will be created. Same area. A little up or little down. But same area, new order flows will be created. Same thing you can observe for the 1 minute high liquidity zone. Actually, you would have got a trade in 1 minute high liquidity zone, but not HLQ zone strategy. This is a pierced zone strategy you learned in lesson 28. Because I am discussing with HLQ zone performance, so I am not registering those trades in our Excel sheet. Because it is purely a pierced zone strategy that I explained in lesson 28. I think most of you might have completed that lesson. What you learned in that pierced zone concept, once a zone is pierced, probably within that area, go to 1 minute time frame. Actually, strictly speaking, this 1 minute zone is not a pierced, it is completely violated. Look into the 1 minute candles. Prices closed above that. But what I am trying to say, this is one of the characteristics of the high liquidity zones. Same area, institutions may again create a new order flows. See, within this 1 minute area, here one more 1 minute zone is created, institutions. We have a drop, you have a base candle. This is a medium size candle, you can keep as part of the base, but here imbalance started from this candle. That's why I consider this is part of the leg out, both these two candles together. Because imbalance is, I already explained in a few days back, maybe 1 week or 2 weeks, within 1 or 2 weeks before today, I explained imbalances concepts in HLQ zone analysis. Based on imbalance also, how you can fine tune the zone, I explained. Sometimes candles looks like medium because time is completed and prices continued in the next minute also. So that's why understanding where exactly imbalance started is here. See, this is a base candle, clear, but this is a medium size leg, but after that the imbalance continued. That's why this entire, both candles together we are considering. If that is the case, this is going to be your new base. Now you see, drop, base, drop, prices came down and again prices reached. Maybe some, of course you will add some few paisa, maybe 1 paisa, 2 paisa, buffer you would have added. Your trade would have been executed. Whatever the profit you got, similar profit you would have got here also. Because same area only it gave you the trade. That means if we would have taken a trade based on the pierced zone strategies you learned, similar kind of strategies you can apply. But remember, this 1 minute zone is not exactly earlier the one I deleted. Let me add that. Yeah, this 1 minute zone is not a pierced zone. The reason is prices completely moved out of the zone and closed. But the high liquidity zones point of view I am telling. One of the important characteristics, high liquidity, lot of order flows will be added. Institutions, they know the levels where they add the order flows previously. Sometimes they choose the same area to add the order flows. Same area, once again they created a 1 minute zone. Immediately we have to understand probably this is the area we can take, nothing wrong in taking a short trade. If it is violated, a small amount we will be losing. See, but how it worked out? What basis you took? Based on the high liquidity zone only. Generally we use this strategy on the pierced zone because it is a 1 minute zone. Prices moved up, in the reverse again they created in the same area, new 1 minute zone is created. Same area, a little, maybe 1 point, a little below, that's it, nothing more. See, today it gave a trade here. Almost they came, maybe 1 paisa difference. Because people would have kept a lot of orders here. They are aware of that. Maybe institutions might have spread up to here, the order flow. Even if you include the medium size candle. Now it will come, see prices now entered into the zone. But we fine tuned up to here because imbalance started from here. So definitely the order flow pushed the prices up to the 15 minutes target again. This time this 15 minutes target is also violated. So then you would have got another 10,000 rupees profit by going for a short trade here in case. But remember, you need to get a lot of experience to understand these scenarios. But if I don't explain, when I get a chance, if I don't explain these scenarios, how do you improve your experience? You have to observe all these things. Either you have to observe on your own, or some experienced people like me, at least we have to share our knowledge with you, so that your thinking level will be improved into a different direction. See, I am not doing anything except I am trying to change all your mindsets, your thinking level. I am trying to provide you a direction to think much better than the other supply demand zone traders. Nothing else I am doing. That's why everyday HLQ zone analysis are very, very important. Because you never know when you see a different situations in the chart. Unless you analyze the chart, you won't learn. Unless you learn, you won't get experience. That's why listening everyday HLQ zone analysis videos are very important, not for HLQ zone strategy point of view. To improve your experience point of view, to improve your skills point of view, you should listen these videos every day. How much time? Hardly 40 minutes or 45 minutes or maximum 1 hour. Today's video is going to be a small time only, because the number of HLQ zones are small today. Okay. So you have seen, right, how exactly the institutions are created their HLQ zone within the same area. Okay, anyway, you hope you understood this. Otherwise, how you would have got this much profit? At least you learned now. Okay, this is about Tata Steel. Next one is very interesting. JK Cement. I already posted at our Telegram channel. If you would have looked into the message Telegram channel today, you would have taken one more trade on the same stuff. During the last 1 hour of the trading, you would have got another trade. Because some of our HLQ zone traders, sometimes they are trading even last half an hour also. Because previously they shared their screenshots with me. Because previously also I explained the last 1 hour trading rules. Last 1 hour when you trade, your target is not 15 minutes zone. Your target is 5 minutes zone. But you should get minimum 1:3 RR. Otherwise you can't take the trade. Why you need to take this trade second time? I will explain the reason. We have strong reasons. That's why I told you have a lot of learning today. Okay, JK Cement is a 75 minutes high liquidity demand zone. So I'm going to the 75 minutes time frame. So this is a rally candle. You have 3 base candles, and medium size candle is also part of the base, and then a rally candle. This is how our software identified this zone. This JK Cement stock, we need to fine tune the zone. While fine tuning, sometimes you will identify aggressive trade setups also. That is also you should not forget. Okay, let's go to the 15 minutes time frame. So here you have a drop base rally. And here the structure is not good because so many candles. You have a rally, maybe this could be a rally, 1, 2, 3, 4, 5, 6, 7 candles. But still, if you consider this whole thing, this is again very near to this zone, but somehow I was not comfortable with this. This candle also I was not comfortable as a leg candle because I consider this also a base. Small candles. So I consider this as a rally candle. All these are all base. 1, 2, 3, 4, 5, 6, 7, 8. That's why I didn't draw a zone here. Okay, even if I draw a zone here, it wouldn't make any difference. Probably you may get a rally base rally here, a fine-tuned 5-minute zone you will get here. If I would have drawn, and this could have been a fine-tuned setup. it could not have been an aggressive trade setup. But anyway, I have a strong reason why this zone works very well, aggressive trade setup. Let me tell you the reasons first. How I identified this zone. See, I have seen prices, see this, look into this candle. After this, prices were moved after this 75 minutes leg out candle, because it's part of the leg out. After that, again prices, see, look into this candle, this 15 minutes candle. Prices came near to the zone, sharply it moved up. A very strong rejection. Then immediately I thought, what could be the reason? Then immediately I noticed two rally candles here. See, this is the first rally candle. This is the second rally candle. Do you remember the concept I explained earlier, a new supply demand zone price action concept? This concept is not based on the imbalances. This concept is based on rally candles or drop candles. They take trade only between the rally candles, two rally candles, or between the two drop candles. They don't care about the base candles. How do they draw the zone? They draw the zone like this. The higher wick of this zone and a lower wick of this zone. Lower wick here, we don't have a wick, so low of this candle. So between these candles, the order flow is much stronger. Let me put a different colors so that to recognize. See, this is a demand zone, not supply zone. Just to make you understand, within this, the higher wick of this candle, lower wick of this candle, we have drawn a zone, a demand zone. And in this demand zone, mostly the order flows are very, very strong in general. But we can't trade like this. You have to apply as per our supply demand zone imbalances. But why we are drawing this zone? We are drawing this zone as a reference. Why we need this reference? Because in this area or near this area, a little above or a little below, or exactly in this area, or overlapped a little up or overlapped a little down together, you will identify a zone in one time frame lower mostly. Why I am saying mostly? Sometimes if you go one time frame lower, there also you may not be having a zone. Again, the lower time frame rally candles you see. Now you need to shift one more time frame, then you will identify the order flow. So that's why mostly one time frame below you will find a zone according to our supply demand zone price action concepts. All these things we discussed earlier. I kept that video in our important strategies and analysis playlist. In the thumbnail heading also you will see that. The new supply demand zone way of drawing the zones. I didn't remember, but similar kind of thumbnail I would have kept. So now let's go to the 5 minutes time frame. Exactly the red color zone what I have drawn, actually it is a demand zone. In that area you will find a 5 minutes demand zone. According to our concept, you will identify exactly in this area. Now go to the 5 minutes time frame. See, 5 minutes time frame, in this area we have a rally candle, two base candles and a rally candle. Let me delete this red color, whatever zone I have drawn. This red color zone we have drawn based on two rally candles. The higher wick and lower wick we have drawn this. Now you see, according to our zone. And this is the area you have a very strong institutional order flow. And the second price action clue, prices came near to the zone and again sharply moved up. That means in this area there is a strong institutional order flow. See today, prices entered and moved up. Once again, prices entered and again moved up. The last 45 minutes before market closes. say last 1 hour of our trading session. Those who looked into this chart, what I posted today in our Telegram channel, and if you would have analyzed this chart, you would have taken another trade from here. Why you would have taken another trade? Because of the concepts you learned in lesson 22. What you learned in lesson 22? Lower time frame zone as an horizon to the higher time frame. Based on that, you would have taken this trade. But let's get into that discussion before I complete this explanation. Okay, here we have a rally-based rally. But if you look into this, our risk-reward tool, we have long position and short position tools here, right? In trading, your long position and short position. Everybody know how to use these tools. I already explained in our training course in one of the videos in phase 2 training. So I have drawn this long position here, but long position, your stop, you should draw you should draw something like this, right? Long position. This is my maybe some stop buffer below, and this is my entry, and this is my target. I'm supposed to draw like this, right? Actually, I'm supposed to draw like this. But why I kept my stop loss within this 5-minute zone? What made me? Your stop loss should be below the distal line of the 5-minute zone, not within the 5-minute zone. Why I did like this? What made me to do like this? This is the doubt you all should get. Even here also you see, my stop loss is within the 5-minute zone, not below the 5-minute zone. Yes, I have taken this decision because of risk management point of view. There is another option. Because this zone is also having almost close to 3% risk is there, this zone, including the stop buffer, even without keeping entry buffer. Only by keeping stop buffer, it has got around 2.6 or 2.7 risk is there. If that much risk is there, how to plan the trade? I have only two options to plan the trade. One, I have to do position sizing, and I have to take in the cash segment, I have to take the trade. Then we won't get much profits. Second option is I have to take a deep entry to plan my trade. There are higher chances I may miss the trade. If you would have planned a deep entry, definitely today both the trades you would have missed. Maybe second trade, maybe you might have got. Still, maybe you might have missed. You might not have achieved till this 5-minute zone. We don't know. But anyway, definitely you would have missed a good trades. That's why again I applied the same logic that I explained to you for Tata Steel. I want to find the exact order flows where exactly it is there. So I went to 1 minute time frame. In the 1 minute time frame, you see here you have a rally, 3 base candles and a rally candle. Small candle, so I kept it part of the base. Rally, base, rally. If you can draw a zone, it will be like this. Your zone could be. This is a demand zone, but just I want to make you people visible on the zone. That's why I'm not changing the color. This is a 1 minute zone. See, below the 1 minute zone, I added the stop buffer. Entry is at this 1 minute zone. With the stop buffer, this entire thing is our zone. Which stop buffer value I used? I used only the 5 minutes time frame, whatever, that much only I added. And risk is small, okay, fine. If it is stopped out, fine, no issues. Because the risk is very, very small. Now it comes within even around 1% level risk we get now, or a little high, nothing more than that. So that is the reason why managed the risk in such a way. Okay, prices entered and then sharply it moved and finally reached the JK Cement 15 minutes target. Here one interesting thing is, if anybody, because here we have JK Cement high liquidity zone, 15 minutes high liquidity zone. Let me go to the 15 minutes time frame. See, when you get a good profit, sometimes you need to take some little extra risk to plan for other trades if there are any possibilities. See, this is a very important, that's why I told you, very important lesson. You are going to learn many things. You should not just stick to only one concept. Multiple concepts you should mix. Once your experience grows, initial stage you will be using one concept, but slowly you have to look for every opportunity that is available on the charts. See, actually the 15 minute zone, here we have a 15 minutes zone. We have a rally, 3 base candles and a drop candle. Again rally, base, drop. See, again a new LOTL zone is created. This itself is an indication this could be a high liquidity zone. After that, several times this zone is tested. See, again it is tested yesterday. And today again it is tested. Today morning it tested and prices came to our fine-tuned zone. Today morning, if anybody would have identified this 15 minute zone, if you would have planned your trade, you would have got one trade opportunity here. Of course, this is not our daily or 75 minutes HLQ zone strategy. But this is a HLQ zone only. What is the difference between any time frame HLQ zone trade and daily 75 minutes HLQ zone trade? This is another important point you should understand. Why we are applying only for daily and 75 minutes time frame this strategy? Does it mean can't we take trades in the other HLQ zones like 5 minutes HLQ zones, 15 minutes HLQ zones? Can't we take a trade? You can take. HLQ zone is the best zone to plan your trades. Then why we are focusing only daily and 75 minutes HLQ zone strategy? That is the question you have to ask immediately. The answer is daily and 75 minutes HLQ zone, we are climbing a success rate up to 80% level. There is no strategy in the market that gives you this much success rate. Why every day I am publishing these videos? You know, these are all not my trades. And you know, I am not giving you any recommendations. And you know, I am doing only after post market analysis. But why every day I am doing this? The reason is, I want the entire public should know about our strategy. Because these zones are generated by our software. Daily and 75 minutes HLQ zone strategy that I explained in lesson 21.3, the third video in our lesson 21. The strategy I explained is having the ability to give success rate more than 80%. Every month we are getting more than 80%. The least so far we got in the last 15 months is 79.5. 1 month, 9.5 or 6 something. Only 1 month we got. That was the only. Majority of the months we are getting 87 to 90%. In between we are getting the success rate. Majority of the months. Few months maybe we got 83 or 84. Few months. But majority of the months it gave beyond 85 to 90 in between. They gave the percentage. More than 85%. Probably we may get hit during this month. Because during this month, the first 2 Mondays, almost first Monday of this month, around 3 stocks were stopped out. And the second Monday, 4 stocks are stopped out. Because of those 2 days, only because of only those 2 days, our entire statistics will hit. But we have to accept. Rarely it happens. Probably that was the adjustment time for HLQ zones algorithms point of view. So those stocks were hit. Something wrong happened to the market those 2 days. Generally, market was bearish. Our bullish trades work very well in general. But that day it happened. Okay. But if you forget about that, our HLQ zones are having which one? Daily 75 minutes HLQ zone strategy. We have 80% success rate. That's why confidently we take trades. Even sometimes if our zones are stopped out, but the other days the trades will recover all the losses. First of all, the losses we get very small. Less than 2%. Many of the trades even less than 1%. After we fine tune the zones to 5 minutes time frame. So losses are very minimal. Even if you get 10 losses, that will be recovered by just two good profits. That's it. But anyway, those many stopped out trades won't happen. If in a single day, if 4 stocks are stopped out on last Monday, not this Monday, before that, the second Monday, probably you won't take all the 4 stocks, right? You would have taken 1 stock, same time other 2 stocks also violated. So the impact on will be only single stock. A worst case scenario, 2 stocks, that's it. You won't take trade in every stock. So that way hardly you won't find stopped out trades within a month, not more than 4 or 5. Definitely you have successful trades more than 10 or 15. Successful trades will be there. Sometimes you are getting more than 2 trades in a single day. More than 1 trade. Because your trade will be completed, prices enter into another zone, and again you get another trade opportunity. Look into this. When you got the trade, 10:15, 15 minutes candle. Go to the 5 minutes time frame. You got 10:20 candle, you got the trade. All of you please observe. 10:20 candle, we got the trade. And when we closed the previous Tata Steel trade, I am opening Tata Steel. When we booked the profit at 10:20 candle, immediately you got the trade opportunity in the next. If you know that you are getting a trade opportunity, generally what we do? We keep alerts. Your alert might have been displayed on the screen. Now this stock is nearing to the zone. You may exit a little before. Immediately you release the fund. Because almost we achieved the maximum profit. And immediately we shift to the next stock. Because the trading view alerts will be helping you a lot. The next stock is JK Cement. See, JK Cement at 10:25 minutes candle it gave you. That means previous candle you closed, the previous trade, and immediately we got the next trade. Then imagine how much profit you would have got. So such kind of things we will be taking care while doing the trading to get the best profits, more profits. Sometimes we exit our trade a little earlier. If you feel there is one more trade opportunity you are getting in another stock. When the first trade is almost nearing to your target, that small target you can compromise, you exit, because the next trade will give you another big target, another big profit. These kind of decisions quickly we have to take. That's why keeping alerts in the trading view is very, very important. Before your entry, just maybe suppose for example this stock the price is at 4,720. Maybe a few, maybe 0.2 or 0.3% before prices are entering, you will keep an alert. So somewhere price is here in this candle, you get an alert. That time is good enough to close the previous trade and look for an entry in this trade. That kind of quick decisions we have to take during the intraday, especially intraday traders. That's why we get more and more money in the intraday trading. Okay, what is the main point I was discussing? I think we were deviated. Yeah, we were discussing about this zone, how we fine tuned at 1 minute level, right? Same strategy applied here. Okay, here now the most important concept you will get. But before that, your trade reached the target. Okay, fine, you got a very good profit. Almost it gave you 1:10 RR it has given, because you fine tuned at 1 minute level. See, go for 1 minute level when you don't have an option to take a trade in 5 minutes zone because of the risk management. Otherwise, the strict rule is take your trades in the 5 minutes. If you are planning every time 1 minute level, many trades you will be missing. Please note this point. When you don't have any other option, because if I don't go to the 1 minute level, I will be missing this trade anyway. I can't take a trade. In that situation only look for 1 minute. Remaining situations, you should be very careful. Sometimes this 1 minute zone will be violated, prices go a little below, and then again it will be started moving up. That's why I am suggesting you not to go for 1 minute level. But when you don't have any option to take a trade in 5 minutes level because of high risk, at that time only you take a little extra risk and go to the 1 minute. Yeah. Actually, I stopped my point related to look for additional trades. I think I am comparing with daily 75 minute zones with other time frame zones. Right? Yeah. So why can't, now your question is, why can't I take my trade in 15 minutes zone, 5 minutes zone? Because 15 minutes, 5 minutes high liquidity zones, they also having good success rate, but not 80% success rate. They don't have 80% success rate. What kind of success rate we get? Maybe between 50 to 60% in between. You may get that itself is good enough. Supply demand zone, getting 50% success rate itself is a huge success rate. Because you will be getting 1:3 or 3 times profit you will get. Out of 3 times, 50% trades are stopped out. That means deduct 1 time. Still you got 2 times profit. If 50-50, if it is 50-50 success failure rate, but more than 50% definitely you get success with 5 minute zones and 15 minute zones. Look into this 15 minutes zone, high liquidity zone. Multiple times it is tested. Already it gave a clue. LOTL took place. That itself is the first clue indicating it is a high liquidity zone. And the second clue is multiple times this zone is getting tested. If you think like that, and if you would have predicted, and what you do, you find in intraday, you won't take trade directly in 15 minutes. You go to 5 minutes time frame. Go to the 5 minutes. Fine tune the zone. While fine tuning, is there any option here? Yes, here you have a failed ERC candle as a leg-in. Drop candle is a leg-in. 2 base candles and then a drop candle. Now draw the zone. This is a type 2. Proximal. If you can handle the risk, even you can draw type 1 also. Because sometimes prices just touch and again they come down. If you feel risk is high, then go to type 2. Or still, if you can balance, what you can do, keep somewhere in the middle. This is up to you, what level you can. Because here your goal is, you should not miss the trade. At the same time, risk should not be high. That way, you just drag and keep it somewhere until the level where you can handle the risk. See here, let us assume this much risk I can handle. You drag. Suppose I cannot handle, reduce the risk. I can handle more, keep the risk. Maybe until this type 2 proximal I can handle. So this is the way you need to handle. See here, type 2 level, how many times it was getting tested. Let us assume this is my ideal scenario. This much risk I can handle. Just assume. Randomly I am keeping. This is the way you have drawn your fine-tuned 5-minute zone. See, today it went up to, again, not today, yesterday. And today it came. If you would have drawn type 1 proximal, today morning trade you would have got. Type 1 proximal. Otherwise you would have missed it narrowly. But after it reached the target, once again it entered into the 5-minute zone and again sharply how it came down. That means you would have got whatever the profit you got, same profit again you would have got even in JK Cement also. If you would have gone for a short trade. Why I am suggesting you to go for short trade when you identify high liquidity zones at the target? The reason is, see, already you got good profit. In this good profit, taking some money and investing that for taking this risk is not an issue at all for you. Let us imagine I got, say for example, 6,000 rupees profit I got. If I invest 1,000 rupees risk for taking this short trade, there is nothing wrong. Even suppose if it is stopped out, still I will be getting 5,000 rupees profit, right? Instead of, first of all, how much profit this stock has given JK Cement? JK Cement has given 12,362 rupees profit, which is 11.3% ROI. Maybe morning trade you will be having a fear. Maybe this time it will be violated. This is my first trade. And moreover, this is a 15-minute zone. It is not a 75 minutes or daily high liquidity zone strategy. If it is daily or 75 minutes, at least I have 80% guarantee will be there to get the success. But here the success guarantee is less. Maybe it is up to 60% or 55% or 65%, anything. When you have a less probability to get the success, you have fear to take the trade because you don't want your trade to be stopped out because this is the first trade on this morning session. In case if you feel like that, ignore this. Now anyway you got the trade. It is successful. Because it is successful, you got 12,000 rupees profit. Can't you invest 1,000 rupees or 1,500 rupees for taking this trade? You know this is a high liquidity zone. Not daily high liquidity, 15 minutes high liquidity. Suppose if this trade is successful, you will get another 10,000 rupees profit or another 12,000 rupees profit. Instead of getting 12,000 rupees profit, you will get 24,000 rupees profit. Up to this zone. If not this, any other 15 minutes of zone is there in between, there you will exit and book the profit. Is there any 15 minute zone here? Yeah, here you have a rally. Maybe this you can consider big candle, rally, base, rally. This rally, base, rally is there, but medium size candles, these ones. So at least you would have targeted up to here. Or even here also you would have targeted rally, base, rally. Either one. At least you get some profit if you exited before entering into this zone. Because you have other 15 minutes demand zones are there. But all these zones are violated today and finally reached here. At least some profit, if not 12,000, some better decent profit you would have got in the reverse. Something is better than nothing, right? When you can take such kind of risks, when you already got some profit, a successful trade, and investing a small amount for this risk management point of view is nothing wrong at all. Because clearly we know we have a high liquidity zone. Clearly it is testing again and again and again. This 5-minute zone. Let me draw week to week so that you understand how many times this zone is tested. This is a drop, base, drop. Tested first time, prices came down. Tested second time, prices came down. Actually 2 times it is tested here. Third time. Even if I ignore because continuously done. Okay, first time, second time. See, this is the third time, and this candle part of this movement only, so third time. And this whole thing is at the same time with different intervals. I can consider fourth time. This is today morning. Today morning at what time? 9:25 candle. You would have got a trade here, short trade. This is not HLQ zone strategy. The strategy, HLQ zone strategy, is based on daily and 75 minutes. This is simple HLQ zone strategy. No strategy at all. Simple HLQ zone trade, that's it. Strategy means you follow the rules. This is a simple HLQ zone trade. You have a 5 minutes HLQ zone, and this 5 minutes HLQ zone blindly you are taking trade. That's it. No strategy at all. With a confidence it will work. If it fails, okay, stop loss small amount, we will be losing. That way if you take, today you would have got a very good profit. And again here, today it reached the target, our trade reached the target, again it gave another trade, and again it pushed the market down. Somewhere here you might have exited and booked the profit, or maybe you would have gained more profit by using some 5 minutes trailing stop loss or 1 minute trailing stop loss. Maybe you would have got more, even same amount you would have gained, or more profit you would have gained. See, while going down, this is the only one supply zone. This supply zone is also not clear. Only leg out is there, but no leg in is not proper. But still, if you compromise and draw, this is the only one. All these are all pivots. No supply zone. Here a drop base drop is created continuously. So that means none of the supply zones are violated. And this is violated after it is tested, and again prices are moving at the time. So while going down, none of the supply zones are violated. Continuously prices were falling down. This is the 5 minutes level. If you are using trailing stop loss, you would have captured the whole money until this high liquidity zone. Here we have to exit because this is a high liquidity zone. So 75 minutes high liquidity zone. Okay, fine. We took a trade. We got a profit of how much? 12,362, which is 11.3% ROI. Now the next question you have to ask, what made us to take another trade here? Especially last 1 hour of the trading session or last 45 minutes of the trading session. What is the guarantee that it works very well? Very simple. Go to the 15 minutes time frame, you will understand. What did you observe in the 15 minutes time frame here? Did you get the idea? Here we have a drop, base rally is created. Drop, base rally, new 15 minute zone, and for this 15 minute zone, this 5 minute zone is the horizon. Of course, this 5 minutes is having again a fine tuned 1 minute zone is also there. So that 1 minute zone is the horizon for this drop base rally. When this horizon is created, again new order flows will be added into this zone. A strong institutional order flow will be there here. Definitely there are higher chances this zone will be having a success rate. Higher chances. Because its supply is much stronger, definitely it will be violated. Rarely it happens. But otherwise, we have higher chances it will get success. So I thought prices will sharply come down because this is also high liquidity zone. We may get another trade opportunity. That is what I thought. But while coming down, slowly prices took and market was nearing to the closing hour of the market. If it would have reached quickly, we would have taken another trade and targeted the 15 minute supply zone. But now, last 45 minutes prices came. So last 1 hour or last 1 hour 15 minutes, any trades you take, your target should be at 5 minutes, the next 5 minutes level. See here exactly the same area, but the prices reached almost close to the digital line. Almost the stop, it entered into the stop buffer area actually. The 1 minute zone is gone. That means pierce the order flow. The stop buffer protected us here today in the second trade. That means the supply is such a strong today. Especially last 1.5 hour of the market, supply was very, very strong. I mean before last 1 hour. Last 1 hour again there was a recovery, but anyway prices entered into this zone. Of course everything is part of 5 minute zone only. 5 minutes we have multiple order flows might be there. Below that there could be so much of strong institutional order flow might be available. How can we say? Because there is no consolidation seen at 1 minute level in this area. See, I haven't seen any consolidation here. But Tata Steel is not like that. Tata Steel you have seen lot of movement here, there moving. That's why I told Tata Steel, if the 1 minute zone is violated, the entire 5 minute zone will be violated. That is what I told. But same thing I didn't tell why. Because here there is no consolidation. Instead you are seeing rally base rally is there. See here. Again a rally base rally. That means the order flow is spread until the distal line of this zone. So that is the reason why this 5 minute zone won't be violated easily. But risk management is not possible for us. That's why we limit it to only 1 minute. We don't bother about the order flow below. If the risk is occurred, that's it. We will exit. Because we can't lose more money. You should be very strict with your stop loss. If you are not strictly following the stop losses, you will be losing the discipline, trade discipline. We will not be unfit for the trading if we don't use these stop losses. Remember, see prices came close to this stop buffer area. But this is the area, already 5 minutes order flow is there. But that entire strong order flow has been stopped here. And then prices were started moving, again came here and again moving up. And finally reached this 5 minutes target. Where is the 5 minutes? You have a drop, base, drop. This will be easily moved up because a lot of consolidation took place here and prices entered. That means consolidation, when it will take place, demand is also, new demand is also added. That's why there was a fight. And finally, you may ask a question, can't we draw a zone, drop 1, 2, 3, 4 3 base candles and drop? This is not a valid leg out because the reason is, see when you draw a zone week to week, see it's almost the body and the majority of the body is inside the zone. Little came out, almost it's as good as the body is part of the zone. So such kind of situations you can't consider. And that is one thing, and leg out is also not really big compared to the earlier one. And until here, what is the RR we have? 1:3.31. And that way it reached. This is the one holded for some time because it is a 5 minute target. Finally, it is slightly pierced and market is also closed. And this is the way JK Cement second trade has given 3,850 rupees profit, 3.5% ROA. See, today you would have got all the 3 trades with the same capital. Your first trade is completed, immediately JK Cement trade is executed. Immediately that is completed, the next trade is executed. You would have got an opportunity to take 3 trades today. You know how much profit you would have got from these 3 trades? Maybe you would have got 26,937. Say around 27,000 rupees or maybe 25,000 rupees a round value. 25,000 rupees profit you would have got today from all the 3 stocks together. Strictly we follow the rules and by doing proper analysis. Of course, you need to have some experience for decision making point of view. Unless you see whatever I am explaining, such kind of decision making skills should you have to develop. Will you be able to develop? Yes. Slowly you develop all the skills, everything you won't happen. Maybe for the last 6 months or 1 year, you've been learning supply demand zone. So definitely it will take some time for you. See, I've been into the market almost for the last, I think, maybe 21 or 22 years. So seen so many things, so many incidents, so many scenarios analyzed. At least I will be in a position to understand, compare it to your understanding level. But once your experience grows, you will also think exactly the same way how I am thinking. There won't be any difference. You don't require to spend 20 years time to get this level of experience. Hardly 1 year or 2 years or maximum 3 years time is required. The only thing is willingness is required. Willingness to learn the new things. Willingness to analyze the things in a different direction or in a different dimension. How everybody follows same footsteps, you should not follow. You should think differently. You should look for new opportunities, new possibilities. So these are the trades, and one stock, few stocks, one stock, I think one stock is also completely violated, and we know the zone will be violated. What is that stock? I didn't remember. Maybe Tata. Sorry. State Bank, is it? No, OIL. Yes, OIL. OIL is completely violated. It is a daily high liquidity zone. This is the one, rally, base, rally. Why? Because there is no 15 minutes order flow properly. It is in the charts. 75 minute zone is there. We have a fine-tuned 75 minute zone. We have a, maybe this is a failed ERC candle, leg in, 2 base candles and a rally candle. So within this 75 minutes area, look into the 15 minute structure. See, lot of consolidation here. All these candles, base candles, so many base candles. The structure itself is not good. But even if you consider this candle as a drop candle, but no base candle after that, and a rally candle. In between all are leg candles. So because of this, easily this zone will be violated, and below that there is no 75 minute zone. So obviously the below also prices will go down. That is what happened. You already learned lesson 16 when a zone will be violated. If a zone is not having a fine-tuned 5 minute zones, there are 80% chances zone will be violated. 20% chances maybe institutions may created some aggressive trade set of 5 minute zones. They might have kept a strong order flows. That could be one reason. Second reason, institutions may create again a new drop based rally and push the price market up. If that is the case, next retracement we get trade opportunity. Because of the new order flow, this zone might not have been violated, except they comes under 20% category. Remaining 80% scenarios, there are higher chances. If there is no 5 minutes fine-tuned order flows, many times the zones will be easily violated. So OIL is as per, and remaining stocks we didn't get the trade opportunities. Let's quickly, because a lot of time we already spent, so I'm not going to explain fine-tuned order flows. Rally, base, rally. Previously I explained this order flow. Last time, I think 2 days back, prices entered into this zone. At the time new order flows are created, I have fine-tuned. You can also look into the charts. You will also be in a position to fine-tune here. Next one is State Bank of India. State Bank of India, already previously we fine-tuned this zone. Today I did not do anything. Look into the old videos. We have a fine-tuned 5 minute zone here. Today prices did not enter into the zone at all, first of all. And last one is ZMR Infra. This is also 75 minutes. This is a 75 minutes high liquidity supply zone. We have a drop, 3 base candles drop, a medium size candle is also part of the base, and then drop candle. And this is the area I have only 15-minute structure. We have drop base drop, but 5-minute structure is not really comfortable. Look into the 5 minutes. Why I'm saying not comfortable, all these things, I feel like it is a consolidation, lot of consolidation here. 1, 2, 3, 4, 5, 6, 7, 8, 9. So drop 9 candles. And maybe if you consider this is a failed ERC rally, 9 candles. So I'm not comfortable. That's why I just, even if we draw, this entire zone comes again. Risk management is not possible. And you see, something is doubtful, better leave that stock. When you have plenty of the stocks, this is the only one stock, no other stocks, then you can take a little extra risk and plan your trades. Already we had good number of stocks. There were some stocks having excellent structures. We got good trades. Okay, this is about today's HLQ zone analysis. Hope today's analysis might be helpful to you. We learned so many interesting and important points. Let's all meet again in our next video. Thank you.